One of the most important sides of the business is staying on top of your finances. It's not easy, sometimes it's very boring, sometimes it's fun, but you have to be consistent with it in order to make progress and in order not to lose your business in some cases. Hi, I am Alena Goso, the founder of Soapymania. Our products are sold nationwide in the United States, and we know a little bit about how to manage your business. And today, in this video, I'm going to talk about finances. But before we start, please don't forget to click like button and subscribe button to avoid missing new videos. And I'm treating all the likes as a thank you. Seeing your comments and responses encourage me to do more. All right, let's go. Before we start, I'm going to tell my personal story with finances. I hope somebody finds it helpful because I learned my lesson in the hard way, and I hope you won't make the same mistakes. Like I said in one of the videos, our Soapymania story, how we grew really fast, really soon, how we ran out of finances fairly quickly, even though we didn't really invest much at the beginning. In fact, we didn't invest anything, but at the same time, in order to grow, we had to bring more funds that I didn't understand. So I work more, we make more, we sell more, but we still need more money. How does it make sense? I was trying to hide behind help of others. Hey, I'm this creative part of the business. I'm gonna be responsible for production, new products. Somebody needs to just handle my finances. It didn't work well. I ended up still getting into this area, but a little later than I should have. I've learned so many lessons. I figured out so many ways that I've made a mistake, but it was a little too late to fix it. Here are the steps the beginner entrepreneur needs to get involved on the day one of the business. In fact, even before the business starts, and you need to plan your finances ahead of time before you start the business. And here are the advices that I would give. So number one, budgeting. I know it's very tedious, boring, it's very annoying for some people like myself, but at the same time, it's one of the most important parts. So if you already have a business, just pull out 3 latest statements of all the banks, put them in the spreadsheet and see where your finances go. Meaning break down them on categories. These are my product expenses, these are my utilities, this is my marketing, this is my labor costs, and so on. If you see in your statement there is a line that, oh, I bought this, but I will never ever do this again, I'm not gonna put it in the budget, please just put it in the budget and see like how you deal with your finances. 3 months, it's very minimum. I would put like 6 months to a year to see a bigger picture, but at least do the latest 3 months. In my particular business, I have to do it for a year just because I have projects that I do half a year and I don't half a year. That's why the latest 3 months would not give me a clear picture. But in most of the businesses, you can get an idea of what's going on in your business by budgeting your last 3 months of the expenses and income. So you put everything in your spreadsheet and then you divide it. This is absolutely must. I have to pay rent, utilities, internet, and have to pay this amount of labor costs. The shipping, I have to pay these subscriptions. This is my minimum. Here, this is the marketing budget that you have to plan and adjust. You need to see, like, if you invest this amount of money, how much it brings you back. And this is how you adjust and see how your marketing works. Try to get an idea in order to see how much funds you can allocate after everything that you must spend it, and then there should be a budget that you plan for expansion. Meaning, if you want your business grow, you have to invest in it. Add some more expenses in order to get more sales. That's an obvious thing. Of course, it's different from areas. So if you sell services or info product, or if you sell physical product. However, there is still a big idea. If you want to grow, you have to invest. Let's say you want to add another course or you want to add another class. So yes, you need to invest more money, invest some of your time or somebody's time in order to make it, to film it, and so on, to get something back. If you're making physical product that's obvious, you need more ingredients, you need to have more parts in order to make more products. If you sell services, then either you add more of your time or you add somebody's time to your field. That means that you have to pay somebody, or you kind of have to work more, which is not unlimited. You only have 24 hours. So yeah, you do have to invest, and that's why you have to put it in the budget. So this is my investment fund. And another thing, you have to have a cushion. To me, it's very stressful if I have less than 3 months worth of my must-have budgets. If it's less than 3 months, that doesn't give me a good night's sleep. So that's why I try to avoid it. So 3 months is minimum for me, because 3 months is technically a good time frame to make some kind of hustles, to make adjustments, to get some funds going. Everything that I just mentioned is very important, and you'll be able to make those decisions only based on the budgets. You have to record every single dollar going in and going out. And you need to understand where it's coming from and where it's going to. You have to be very consistent and very disciplined in order to give yourself a gift of peace of mind. And budgeted is one of them. That is training your abilities to stay on top of your finances. In other words, where your attention goes, energy flows. That's why number 2, accounting and control. Meaning, so you have your budgets, you know what's going on, and now you start adjusting and readjusting everything. So now you have your must fund, you have your marketing budget, you have your reinvestment budget, you have your cushions. Now you need to manage and control. So if you want to risk something and you want to sacrifice your cushion, which I do not recommend, but sometimes it is the only way, because you know that money is coming in after this period of time and you're going to be able to fulfill this bucket, but you need to manage your funds. Again, where attention goes, energy flows, meaning you cannot control or manage something if you do not pay attention to it. So if you manage your finances, let's say you see that there's something going on and there is a problem, you have to measure it more often. Let's say you check your budget, so you check your finances, not like once a month or once in 3 months when financial manager brings you a report, but you need to be involved in it and you need to have more frequent check-ins. Probably yourself. I suggest doing it yourself. I suggest looking at your books very frequently if you want to have like stronger results. Number 3 is profit reinvestment. So profits are great. Like once you make a big sale, you got a big account, or you just had a huge sale, or you just had a huge event and it was very successful. This is all good, but again, you need to go back to your drawing board and see what you're gonna do. If you want to just pull everything out, that most likely your business is gonna stay on the same level, if not going down. In fact, if you're not growing, you're dying, meaning there's no plateau in business. So that's why you have to always grow. You have to always invest more. You have to reinvest your profits, or like at least partially. Most of the businesses, especially at the beginning, you reinvest pretty much everything you make. That's why it's very hard to assess how profitable business is, just because you see on the books that your business is so profitable, but at the end of the day, you don't see this money. And it's so discouraging sometimes because, hey, I'm working so hard, I'm growing so much, and I'm making so much more, and I have like more people working for me, and I have more accounts, and I have more sales, but I don't see this freaking money. What's going on? Yes, it is discouraging, but at the same time, that means that you are reinvesting, you're adding more, you're growing. Well, unless you're losing money, which you only figure out once you get into your finances really deeply. Of course, you have to pay yourself first, so you have to have some kind of salary, some kind of satisfaction. But it doesn't have to be very much. First, because you're going to be paying taxes on it, and second, just because you're going to be growing slower or run out of funds very quickly. You have to measure yourself. You can't pay yourself very little. First, because it's against the law, and second, because it's very dissatisfying and you're going to burn out fairly quickly if you don't pay yourself enough. So that's why there should be some kind of golden middle where it's not too much, not too little, but it's just right. Okay, number 4, fund reserving. That means that on top of the cushion, you have to have another cushion, but this is for something unexpected. Yes, you can pull money out of your safety cushion that goes to your must-have budget. However, that's very risky. Let's say something broke. Your AC at the warehouse stopped working, and it's not very cheap to replace one, and you have to sacrifice, let's say, like 3 months worth of your rent. That's very risky. So that's why you have to have some kind of cushion that covers unexpected events. And next one, number 5, financial planning. Like I said, you have to manage, you have to control, you have to manipulate, but this is in the moment. Financial planning is when you predict what's going to happen in 3 months, what's going to happen in 6 months. So it's like long-term plan for your business. It's impossible to know for sure. It's impossible to predict to the penny or to a dollar how it's going to grow. But at least based on this scenarios, if everything stays the same as it is right now with these increments of the investment, then what's going to happen? So you plan, or that this account is coming through very soon. So you add it to your plan, and that these accounts, they have like net 30, these accounts have net 60, these accounts have net 90, or some of the fluctuation going on in the repayment. So you kind of predict, okay, if I make my average sales to this account, that's this amount of money, and I know that I'm getting net 30 on this account. So okay, last 3 months I sold this much, then let's say it stays the same, which is not a good sign, but again, it fluctuates throughout the year because of the seasonality, because of weather, because of anything. There's a lot of things can be possible. That's why predicting long term will give you ideas on when you can maneuver, what you need to focus on. And this is actually sometimes very eye-opening that, okay, if we're gonna keep doing what we're doing, this is where we're gonna end up in the year. And sometimes it's like, oh, I don't want it. I want something different. So that's why, okay, I don't like this prediction. What do we need to do in order to change that? So that's why it makes you think, stay on top of your business and your growth and your financial management skills. And technically it gives you a roadmap on where you're going, where you want to go, where you need to go, and so on. I hope you find this video helpful. Please don't forget to click like. I will be shooting more videos about finances. I hope it's not scaring you away from doing the business, because at the end of the day, if you know exactly why you're doing this business, then staying on top of your finances is only going to help you to grow more. It's not supposed to scare you away. So yeah, thank you for watching.